Good morning. Gold is just $30 away from the $5,000 mark, and silver also like a few cents um, shy of the $100 mark. A historical record for both and for silver, hitting triple digits. But before we get excited much, don't forget these divergence, especially in gold and also, of course, on the silver. And this is just the weekly charts. The daily charts also show divergence. Okay, indeed, parabolic move to the upside, especially for gold. And let's just stick to gold. 1 second. Well, that was the wrong one. But yeah, still, the risks are brewing, seem to be brewing, at least on the in terms of momentum. So the setup is simple. The dollar hit its steepest weekly drop in months. There have been tensions with Greenland, of course, and also after Davos, which also sent gold down momentarily, I would say, due to the easing of tensions, supposedly after a framework deal between the US and NATO. But at the same time, what else has happened, guys, is that the yen collapsed, okay, after the BOG held rates, and that happened overnight, but it raised inflation forecasts. So there is a lot of fiscal risks, of course. We also have a snap election in Japan in February. So currently, there is no safe haven in USD or JPY, and capital is just simply flooding into precious metals. Now, if we do measure the previous leg, right, this correction, let's say not leg, this correction, because typically markets extend in similar corrections. Look at this. We are seeing that we have actually reached this measured move target. What else we ought to do, obviously, because we have to look at markets in waves as well. This to me looks some sort of five-wave leg as well, right? And typically in precious metals or commodities in general, the fifth wave in Elliott waves is the one that extends most. Now, if this is indeed 1, 2, 3, 4, 4, if we, as we suggest, then the net distance between these waves down to the last correction, the 100% also means we have achieved that target, 4,930. So the next leg to the upside is really the 5,100 and then the 5,200 or so. So even the Fibonacci's are telling us that going forward, the important levels currently are major psychological levels. Okay, so now let's take this away and let's look at something else that is also important. Now, when we are moving in a particular uptrend or any uptrend for that matter, we typically do this within a channel, right? Now, what we currently see is that markets have extended beyond that channel. Okay, they do so with momentum, but this momentum is kind of flattening out. If you see my point. For me, this is not still an alarming signal. So there is a chance that we break above the 5K in order for us to get a correction. What is important to mention here is that we are in an accelerated channel. We have broken outside that base trend and we are accelerating. Okay, so as long as we remain above this 61.8 Fibonacci support, probably 4,680, the bias remains to the upside. Now let's go down on the 4 hour a little bit because we need to see this also in the shorter term. what we are going to do again, we're going to see where is our 1 and our 2, where is our 3 and our 4, and where perhaps could be our 5. So in a similar manner, we're going to use the net distance of these waves. And you see again, we have done the 100%. So the next level up, guys, in the shorter term is the 5012 and then 5050. Similarly, and we're just actually repeating the same process, right? If you see over here, we are again in an accelerated trend. So as long as we remain above this channel, which again brings us to the 61.8 Fibonacci at 4,768, then the short-term trend remains upward. But there is an alarming sort of signal over here. In the 4-hour chart, we do see a divergence, okay? So this territory over here, like $20 or $30 territory from 4,910 to 4,020 or so, is going to be very important for us to see whether we are going to see a correction. Now, typically around these levels, there is a very high chance that a lot of sell orders are waiting at this major resistance level, okay, both for silver and gold. So in case we do see a pullback, okay, due to profit taking above or below or anywhere near the 4,000 level, which currently can also be a case because we have supposedly done 1, 2, 3, 4, and 1, 2, 3, 4, and 5, right? It could literally be a done case. We need to still maintain the 4,600, 770 or so. As well as we remain above that level, then to me, this looks like a continuation to the upside. Now, for the brave ones, there is a short position at 5K with a stop loss, I would say, above the 5,050 and a take profit at the 61.8 Fibonacci at 4,770. Okay, but as you know, trading against the trend is not really the ideal scenario. Obviously, down on the 1 hour, there are better options to see how this could play out. You could wait for the RSI over here and see what happens here. Are we going to drop or are we going to go back up? Because this could be your entry, your trigger to the entry. So look for perhaps a correction down to 4,800 at first, a retest, and then further leg to the downside. But one of the things that we need to take into account always in such particular moments and moves, it's that it could be a steep correction. So for me, this is the 5K is going to be a very strong resistance, but how? The question is how markets are going to react to that. Well, this is what is the current risks. So if 5K triggers heavy profit taking and we lose the 4,900 or so, expect a deeper correction. Okay, so watch the 5K level closely. A break with volume confirmation opens the door to higher levels, but the divergence says to respect the resistance. Trade safe.